All right, so after that weaker than expected jobs report was released late last week, the stock market has seen kind of a spike in volatility lately. We've seen some real down days and some real up days. So what does it mean for your money and the overall economy? Here to break it down is money and business expert Derrick Kinney. Derrick, it's always great to have you back.
Thank you, Jason. Good to be with you.
All right, so let's dive into this. First off, we should ask why the recent jobs numbers were such a surprise.
Well, this is very troubling, and I tend to be a pretty neutral, level-headed money and business expert. But when you see less people working, that sounds alarm bells across the entire world, because we know that 2/3 of the economy are average people like you and I spending our hard-earned dollars helping grow this economy. If less people are working, or worse, less people are happy in their current jobs and not likely to find a new job, that spells bad news. And so that was a shock by how drastic that news was to the market, and we saw a huge amount of volatility because of it.
Yeah, the stock market does not like surprises like that one anyway. So what does this mean for someone who has money in their 401k or maybe an IRA? They're trying to save for retirement, and you start to get these roller coastery days in the stock market where one day it seems like it's just soaring, the next day it's just the bottom falls out of it.
Well, listen, I'm an investor too, and it's fun to tell your friends about how great your investments are doing. And really often we feel better as a person the higher our account values go. We want to have that extra drink at the restaurant. Let's order dessert. I'm feeling rich today. The bottom line is you're likely to see a lot more roller coaster feels over the next few months. We've got earnings coming out, but now we have tariffs about to take effect, less jobs numbers, worries about will the Fed reduce interest rates. All of these things coming together create this sort of crunchy stock market worry type scenario. So what I would tell people is the 401k is a way to every paycheck add money. Let it ride. Unless you're losing sleep at night, continue to add because you're buying more shares when the market drops.
Okay, so why does the market get so jumpy when news like this hits? It seems like there's so many experts, and you'd think that they see some of it coming, but man, that market just goes crazy.
Well, it hurts because it's our money. And it's more fun when the market's going up, 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 and it's a better story to tell. The worry right now is there's so much uncertainty. We've not had a president that has had this type of uncertain economic policy in recent decades. We've never had one that has implemented tariffs like this. And then people wonder, what is the impact of the cost, as you talked about, Jason, the cost of school supplies as a result of a tariff? Or what are meat and eggs and bacon and all the things we eat and use every day going to cost? We don't know. And what impact will it have on the job market and the economy? So all of those unanswered questions lead to tons of uncertainty. The market doesn't like it, and you're likely to see more volatility, like I said, especially over the next few months.
Yeah, I think a lot of consumers don't like uncertainty either. And so let's finish with this here. What's the biggest mistake that we make when the market is dropping and feels really volatile like this, and how do we avoid it?
Well, most people tend to buy high and they sell when it's low. And typically when you let your emotions control your money, you lose every time. It's the story of regret that people tell at the bar while they're sipping a cocktail. I wish I wouldn't have made that bad decision. And you don't want to be the one to make that. So let me help save you from that right now. The key is realize the market's going to be dropping probably, especially having more volatility. Keep adding money to it. What we find is it's like gardening. When you put the seeds in the ground in the fall, eventually the spring comes out and the sunshine comes out and things begin to blossom again. So stay a diligent investor and don't base your decisions on emotions. It could really hurt you, especially in times right now.
Okay, so you might not get that instant gratification, but just keep plugging away, keep those contributions going to the 401k or whatever, especially when things get knocked down, because you're buying it cheaper in that sense too. Derrick Kinney, always a good voice of reason for us when volatility is high. Really appreciate it.
My pleasure. Thank you, Jason.